Okay, good morning, everyone. Welcome to this Geneva Association press conference on insurance and disaster risk reduction. My name is John Fitzpatrick. I'm the Secretary General of the Geneva Association and a lifelong observer of the issues that are covered by these studies. We are webcasting this event. A couple of housekeeping items to start with. Because we're webcasting this event, I need you to take out your mobile device and please turn it off so that we have a clear communication. Also for the Q&A, and we encourage as many questions as possible during the time frame that we have, there will be a microphone handed around to each of you for your questions, and we encourage them. My role here is simply to welcome you all to this conference and introduce the speakers that we have. We have assembled some very experienced people to speak on these issues. They include Nikolaus von Bomhard, the chairman of the Board of Management of Munich Re. He is also the chairman of the Geneva Association for the last 4 years, and we're very grateful for his service to the Geneva Association. We also have with us Michael Butt, the chairman of Axis Capital and co-chair of the Geneva Association's Climate Risk and Insurance Working Group. He has also spent his career watching and working with the issues created by the wind and the earth movement of the earth and other things that are important to us all as human beings. We also have in the room Walter Stahel. Walter can stand up. He is the head of the risk management unit of the Geneva Association, and he is co-editor of the book that is on your chair, one of the 2 books that are on your chair, involved in the insurers' contributions to disaster reduction. Of course, today we're very honored to have here Margareta Wahlström, the special representative of the UN Secretary General for Disaster Risk Reduction. We're very grateful that she can be here. She, of course, the driving force behind the report that has been created by the United Nations in this area. It is, of course, a measure of the seriousness with which these issues are occurring in the world, and frequently, as we see even in events this week in Europe, that we have a focus of the Geneva Association on this topic at this time. Insurance plays a fundamental role in the economy and in societies, as many of you know. It is a shock absorber for the real economy when insured events occur. But it's what we hope to do at this session here specifically is with the speakers and with Margareta in particular, provide you with a United Nations perspective on the role of insurance and disaster risk reduction and what governments and the industry could actually accomplish with a cooperative, forward-thinking agenda. With that, I'd like to hand it over to Nikolaus for his comments.
Well, thank you, John, and good morning, ladies and gentlemen. Pleasure for all of us here to be with you. And I want to introduce briefly only, starting by saying, why is the insurance industry here? And you only see the 2 of us from the insurance industry here, but there's plenty more. And the reason being that the Geneva Association is holding its General Assembly here in London. It's the 40th, by the way. The Geneva Association was founded in 1973. And it is an association of CEOs. It's not an association of companies. The membership is around 80 today, and we will have and meet here 60 CEOs of the largest and most relevant insurance companies in the world. I would dare to say it's the most prestigious meeting in the insurance world overall. Well, the association's objective in general, and that is of course very close to the topic of today, is to educate and develop the understanding of the, as we consider it, unique role of insurance and the importance of insurance in the economy and for the society at large. And the association works through publications, the one that you have today on your chairs, but also conferences, and of course maintains a very active discourse with policymakers, regulators, whoever has something to say or to decide in our world of insurance. We are extremely grateful to our host members receiving us here for our General Assembly in London. In fact, there's 8 CEOs of UK companies. Just name them in alphabetical order, the companies now: Emlyn, Aviva, Bupa, Catlin, Hiscox, Prudential, the RSA, and we are particularly thankful to Lloyd's, the 8th one, because they also made it possible for the Geneva Association to hold this press conference here and today. Well, welcome also to all of you. It is very important for the Geneva Association, as for the industry, of course, to be able to exchange views with you, the representatives of the media, of the press. And today we are, and that is the reason why you are here, in fact, the Geneva Report number 7 is being launched, Insurers' Contributions to Disaster Reduction, a series of case studies. And briefly, from my end, something to the report, and Michael then will further elaborate it. It's 12 case studies, I think, very illustrative of what insurance and governments together could do or should do to help to reduce disaster risk in our world. The findings are 6, highly condensated, but I think they speak for themselves. The purpose of this report is to shine a light on some of what we consider key areas where governments and insurers do in fact collaborate, and to highlight the ways that we can make this collaboration more effective. And the concept in fact was developed as part of an ongoing dialogue with the UNISDR, which Margareta here represents. And we have been in contact for a longer time. It's not the start of it, but these case studies are closely linked to the dialogue. And as John earlier said, a report from the UNISDR has been published on the subject only 2 weeks ago, in fact. Well, this is our contribution to the discussion and how we see what has been done in the past as regards the collaboration of governments and insurance industry. We think that governments do not understand to the extent necessary what insurance can offer in that context, and should much and could much better harness the insurance industry as a whole. It is about the increase of the resilience of economies and societies as a whole, and at the same time, of course, then once such a horrible event occurred, reduce the consequences. So it has these 2 sides, these 2 angles to it. Let me make one more remark as regards the events themselves. Of course, the discussion on climate change maybe dropped a little bit on the priority list as a consequence of the financial crisis, but I think it's moving back up slowly and rightly so. The problem that we also see in general is that countries that have, in comparison to the developed world, a rather lower income or lower middle class population have been affected way more seriously in the past by the change of what I would call the disaster patterns, higher intensities of these disasters, higher frequency. They are the ones most affected. The developed world is affected too. Sometimes you see striking numbers of the disasters, but when it comes to the real overall macroeconomic consequences, these countries are way more affected. And they are not prepared. And when it then comes to what we see, the way we measure GDP is of course very much output driven. So even the rebouncing of economies often disaster by the activity to rebuild. You can see clearly in countries like Japan, take Japan, the last horrible tsunami, earthquake and tsunami, where 90% of the bill of close to $40 billion have been paid to the insureds in the first 3 months. That, of course, kickstarts the economy, pushes it, and helps not only to heal the wounds of the disaster, but also to get the industry, the economy back into shape and help the individuals. If you take the counter example, goes further back, but it is an extreme one, is Haiti. They still struggle. And if you measure that in GDP development, you could say, even though it comes at a high price, that GDP after such a disaster, in the course of 5 to maximum of 10 years, will gain an extra 4% in the sort of run-up to rebuild the economy. Countries like Haiti, or with the incomes I described, developing countries, at best move sideways with their GDP. So there's not only this sort of a kick, it's actually worse. They are being pushed back in their development. So this is not only unfair, it is unnecessary. And that is what this report is about, basically. I think there is many room for governments, and by the way, not only national, but also supranational. That is important to me. It could be the UN, it could be, since I'm from Europe, European Commission, who also is taking up the envelope. So we should not think too national in that regard. Of course, national governments are at the forefront. And coming from Germany, and luckily seeing the sun again, we had horrible 5 weeks with almost incessant rain, inundation, of course, and floods all over Germany. Not the first time. You don't have to go back too far. 10 years back, pretty much 11, we had the same thing. And again, unfortunately, we see politicians now in the run-up to elections offering things to their electorate, hopefully voters, that actually should not be offered in the first place. I'm not saying it is not right to support people when they are in misery, but if people can prepare for the misery, and I'm not speaking of insurance in the first place, but preventive measures and insurance, let them take care of their own destiny and don't step in too quickly, even though it is enticing in a condition as regards Germany, the run-up for major elections, not only in Germany, but also in Bavaria, for example, which is heavily affected by the inundation. This just as a side remark, because it's very topical. I see it again and over again, the same reaction of politicians, which I think is not the right one. With that, actually, I would like to stop here, and Michael, hand it over to you to go a little deeper into the report.
Thank you very much, Nikolaus. I think the point that Nikolaus has raised about the industry's role going forward is a critical part of this report. We're trying to highlight the knowledge, the working knowledge that the insurance industry can bring to a better understanding of climate risk as it goes forward, and how society and governments can improve their reactions to these risks. We were here in 2008 as a Geneva Association. I forget whether it was for an AGM or for another meeting, and at the time the financial crisis was absolutely at its peak. And I remember well the Prince of Wales saying at the time, financial crisis will pass. Climate risk won't unless we do something about it. Picking up your point, Nikolaus, the economic environment has diverted attention to an extent from that which we're doing on the whole issue of improving our understanding of climate and reaction to it. And I think now we're perhaps moving back to a higher appreciation of what needs to be done, and we as the insurance industry feel that we have a very constructive role to play with the parties in doing that. However, in order to do it, we need to improve the knowledge that we have from the industry in order to have that appreciation of our role and our contribution. Insurance is not always viewed as the most positive social contributor, but it is our view, obviously, that it is, and that its role and our real detailed knowledge, our pricing knowledge, is of real value to the industry going forward. Having sort of emotionalized the issue a little for you, let me move to some of the practical aspects of it, which is that we, as an industry, can be helpful both before and after the disaster. When governments think about the aftermath of the disaster, as Nikolaus said, they're more focused upon how to handle the immediate emotional reactions around it and to help the recovery. That's not always done in the most sensible way. In the example given of Japan was a real practical example. 90% of claims were paid within 3 months. That was enormously helpful in the recovery of the Japanese economy. Just as in New Jersey and New York following Sandy, we've had the same issue of the money being put back into the economy for recovery. Our understanding of risk management as an industry, which is improving by leaps and bounds as we go forward with technology at the moment, and we have data knowledge that was not available to us before, is incredibly important in our ability to serve society and government in improving our knowledge of risk. Cooperation with governments can be ambivalent. They can be helpful or they can be less than helpful. We have examples, the California Earthquake Authority and the Japanese Earthquake Insurance System. Both were publicly initiated but privately run and had relatively low take-up as a result of misunderstanding within the community as to the role of the insurance role. As a result of that, the take-up was much less, so when incidents occur, there is less coverage and economic recovery. Because of a better understanding following the Japanese earthquake and of the role and the perceived role that insurance played in the recovery, the take-up in Japan has gone up by 10%. So it's a knowledge issue of spreading what we can do and how we can help recovery. Spreading knowledge is therefore a precondition. This report is an attempt to begin that involvement of the insurance industry having a better social role in the knowledge spreading. What do we bring? We bring primarily experience in pricing of risk, understanding of risk, pricing of risk, perceiving of risk. Our job is the pooling of risk. It's not surprising, therefore, that we have a focus on that. By pooling of risk, we spread the risk. The reinsurance is a vital part, as my friend here knows, leading the largest reinsurer in the world, in terms of pooling the international aspects of risk so that we can actually pay those losses when they occur. No nation can afford to do this on its own, and if it tries to, the Haiti example is one, not that it tried to, it didn't have the option of not, we have a role, a social role, a major social role in developing countries to help spread the risks that they cannot afford to take themselves. This is vitally important going forward because, as we all know, climate strikes wherever it wishes, not necessarily only in those countries that have bought insurance and reinsurance. We've paid 108 billion in 2011 in losses. That was Thailand, Japan, Australia, New Zealand, and the US. 2011 was a peak year in terms of unpredicted and unexpected disasters. We expect winds in Florida. We expect winds in Mississippi. We expect tornadoes, but we had some very unexpected losses in 2011. Was this haphazard, or was it a reflection upon different elements taking place in the climate? Thailand floods, totally unexpected. Should have been expected if anybody had looked at what had happened there in the last 15 years in terms of building and the rainfalls. We have greater intensity of rainfall. Our role is to try and price risk. Governments will often try and ignore that pricing. The latest comment from Nikolaus in terms of the German political process is a very good example, and only the most recent. Florida is another one where we had constant attempts by politicians to underprice risk, i.e. to subsidize voters' intentions by making things cheaper than they should be. We send out real messages as to what the price of risk is to the communities we work in and with. And those should be listened to because they are actually the truth to which people should be reacting. we as an industry feel very strongly that we have a significant role to play as society and governments address climate risk. We wish to cooperate with the bodies around us, including the United Nations, in achieving that. And with that generalized comment, I'll pass across to Margareta, and thank you very much.
So thank you so much for that. And we are here, of course, as a manifestation of a collaboration that now has begun. As we just said, we have started this conversation together, and now we really have to drive it forward. The UN's work on disasters, of course, goes back a few decades. In the beginning, it was driven really by scientists and technologists that saying it is going to overwhelm the society as we know it. Please watch carefully. They could not quite convince, reference to the climate discussions that slip off the agenda a bit. They could not quite get decision makers to see how risk accumulate very quickly, not because of the hazards, but because of the way we construct societies, infrastructure, exposure in very vulnerable areas. And over the past decade, for example, there is a very clear coinciding curve between risk accumulation and economic growth. They go hand in hand because you cut corners. You postpone to later what you have to pay for one day. And some very large economies today have completely shifted their policies on risk management, on environmental and disasters. I know China, take a look at the new 5-year development strategy, and they completely turn around from managing the event to actually begin to manage the risks and prepare for an approach that takes much more consideration to the social demand for better safety, a better environment, and more, a more sensitive approach to what people expect them to do. So as we have gone through the work on disaster, how to get the message across as disasters continue to increase frequency, intensity, we've gone through the link from disasters and poverty, disasters and public investment. And this year, the report that you have on the chairs is in fact on business, private sector and risk. How do they see risk? Because for us, there is a simple economic and policy logic. Investments in any country in the world, 75–85% of it is private sector. So unless we can influence and engage private sector in thinking risk, resilience, risk reduction in their investment, preserve the resilience of investments, you cannot really impact the big risk picture. And just looking at the figures, you will find in the report that total disaster losses are at least 50% underestimated. Not because of ill intent, but because there isn't enough attention to counting them. The data, which I think is an area we have in common, that's just not enough systematic collection of data. In an era when governments collect statistics and data about everything, this has not yet crept up high enough on the agenda, but it's getting there. That's why I can already say, add to the figures that you see on your annual report. These are global figures. It's the top level mega disasters. Just recently, last year, the Florida International University did a survey in the Americas with SMEs, small and medium-sized enterprises. 1,400 companies were interviewed. Their biggest losses, and that's where the big losses happen, are from failing public infrastructure, poor roads, electricity, power cuts, failing basic infrastructure, stop their business. Most of them have, of course, no insurance. And certainly they have very minor, if any at all, financial buffers. So many of them go out of business. And these ones are the ones that keep communities in lower income, growing economies really going. So that's also the other phase of disasters. It's of course Japan, Thailand, but here is where risk is accumulating fast. So look at what we are now looking in the next coming decade. We have the climate stress, you have the enormous infrastructure stress, we have a lot of social and economic stress. In fact, I think you said, Michael, that the insurance industry is not always seen positively from a social perspective. And there is...
That may have been an understatement.
It may have been. I think one of the perspectives of the past few years, enormous cost to insurance industry, but people's enormous expectation that the insurance in itself is a solution has led to, maybe that being an understatement, and far too many anecdotes where the insurance is not there when you really need it. So I think one of the opportunities we have is together to begin to change that image and demonstrate that your words of engagement really leads to what I don't think I ever go to a meeting, and I go to many meetings, where there isn't someone who says, yeah, these are sort of big challenges, but what about the insurance industry? And so we are still looking at what's the financial instruments we have in a very narrow way, as insurance is the one thing. So part of the work that we are now doing really is also with financial industry, with looking at public and private investment on mitigation, land use planning, tactical instruments for reducing your exposure and risk, is also to hopefully engage insurance industry in a conversation on where is the scope for innovation. And of course there is innovation going on, but how to get it a bit more in the public-private conversation. So the insurance is seen as for a lot of people as a very important, significant area that is of support to them. But now let's go to the other side of insurance. Certainly the many poor countries that Nikolaus mentioned, there is no insurance. Local governments, even in Europe, do not insure themselves very well. They self-insure. And how do individuals take decisions on insurance? Sometimes I think that beyond the rational evidence that we can offer, there is an element of human psychology that handles risks in very peculiar ways. And interesting studies on after a hurricane, people buy a lot of hurricane insurance, and after 2 years they stop paying the premium. Next year the next hurricane comes. So the whole area, I think you both talked about education and making insurance understood in terms of its bottom lines, but also how you have a personal responsibility. You don't transfer it to an insurer just because you get fed up paying for the premium. So how do business, before we come back to insurance, since business is probably one of the biggest clients of insurance, how do they look at disasters as a risk to them? Well, largely not at all. In the preparation for this report we did some work together with another private sector partner, which is PwC, looking at a number of large, in fact, multinationals, and with them trying to get them interested in what type of risk and what are the losses. And in fact, very few of them had ever thought about it as a perspective for mitigation. It was more paying for the losses and how to mitigate it after the fact. So that became a very interesting conversation, not only about the losses, direct losses to the assets, but what are the losses, the indirect losses, the losses, macroeconomic losses, how do they impact corporations? And I think, we also looked at the major risk companies, for example, doing country analysis. And we realized that, for example, in the case of Indonesia, in the Economist Intelligence Unit, they don't even mention disasters as a potential risk to business there. So you just see there's so many disconnects in disaster is a risk. It's a risk you can manage to some degree, not completely. And insurance is one very significant instrument because the insurance industry, as I think you just mentioned, you are expert in analyzing and understanding risk and what are the instruments that we can use for it. But how we get to using insurance in a more proactive manner, not just to pay for the losses, but also help with the prevention and the preparedness, and how to create that public-private conversation that leads to a more harmonious approach to do it is really the opportunities that we do have today. And that's where we feel that we can really assist in this. I'd like just to highlight a few things that are critical, and you have already mentioned this issue of how risk price becomes distorted by all kinds of not very well informed interventions. Really an area for public and private to work together. I don't even think that governments realize what they do when they go on election campaign and start making promises. And there are countries, United States is another one, where really the insurance mechanisms they have put in place as a federal system is at the same time undercut by federal support to disaster victims. So you take away the motivation from the individuals to protect themselves. And at the same time, one of the very positive opportunities we do have now is that part of the world that have no insurance at all. Not only private insurance, but also the business and governments don't insure themselves. And these are all the growing economies. And in a way, this may sound as an over-optimistic statement, but in these countries, Africa, Sub-Saharan Africa, for example, a huge growth of infrastructure in the next decades. This is where an enormous amount, 25 billion, trillions of dollars of new infrastructure is going to go up. If not even all of them, but if 50% of them think resilience for the future, that will actually cut the risk accumulation curves globally. If China and India are successful with their strategies, think about the big infrastructure countries. Look at the coastlines, all the exposure that they accumulate. So what are the areas? And there are some also very promising initiatives, tests of how can poor people access insurance. And it's very important for not only for ethics, but these people are also consumers and they are also citizens that are key to future economic growth. One area, and it's mentioned also in this report, in the recommendations, you will find there's a great deal of harmony between what this report says and what we also say in terms of what is needed. Access to information. Not only consistent collection of information, but also free access for citizens, for corporations, to legitimate and authorized information. Education, and I think really here is a free territory where insurance industry and people like us can work together with governments to really systematically educate, inform, and test. The pricing issue, I understand this can be very sensitive, but I think people like us have the job to put the pricing contradictions at the table and demonstrate that these are contradictory policy results between the private and the public, not helpful to either party. Help shape public policy. This is an important area. In climate risk, this has been on the table for a long time. I can assure you it's now on the table for disaster risk in general, because the most costly disasters you can imagine are earthquakes and floods today. That's where you have the billions of dollars every year, even an average year. In the past 3 years, we've had costs of over $100 billion a year from earthquakes. So see that as a sign for the future. The innovation I've already mentioned, lots of capability for innovation and I'm sure it's happening, it's just not coming out to the public domain so energetically. The whole risk expertise area, the risk modeling and pricing and how to think and perceive risk and turn it into practical action is something that insurance industry really can offer. When we started as a UN, when we started this work, we came like everybody else with the assumption that the private sector is really good at managing risk and the public sector is not, for all kinds of, sort of wrong incentives. But what we found is that there was this missing risk of all the disasters and the exposures, and the lack of not really seeing the future, because a lot of the areas where you have, as I already said, the fastest economic growth today are also the areas where risk is fastest accumulating. So that's the area where I see this as a fantastic start, but only the beginning of what we can develop together with many, many partners among governments. Just last week we concluded our 4th global conference on disaster risk in Geneva. We had 3,500 people there. It's tripled since the first one, and I don't think we have seen even the middle of this process of risk realization yet. Thank you.
Great. Okay. Now it's time for your questions. This is the important part of the meeting. We've assembled experts who have dealt with this risk in a very detailed way over a long period of time. So we're very interested now to get your questions. We have Anthony with a microphone, and here is the first question in row 3.
Hello, Chris Vellacott from Reuters. You expressed at the start your frustration at political response to disasters. It's an emotional response after the event, and you would prefer to see preventative measures such as better insurance coverage in advance of these events. Perhaps you could comment on what's going on at the moment in Central Europe. How well covered were businesses and households in the countries affected? And also alluding to the comments you made about the Japan earthquake and tsunami, where 90% of the claims were paid within 3 months, facilitating an economic bounce back. Can you give me any figures or any ideas, any predictions on where we stand in Germany, Czech Republic, in terms of when we're going to see a macroeconomic bounce back? And what's the cost going to be? Do we know that yet? What are those claims going to be?
It's too early. The water is still everywhere, so before you can assess the damage, the water must retrench. Difficult to say. In general, you could say for an event like floods or inundation that we see now in Central Europe, it is not highly insured. This is the lowest insurance penetration that you possibly see, partly because also the industry in the earlier days was quite reluctant to offer it. That changed. And today in Germany, we say that we probably can insure close to 99% of all risks that you could possibly insure. And for the last 1%, you then have to go really deep into discussion how one could do it, but the insurance density is very low. That's why the macroeconomic loss is many times bigger in general for flood or inundation than it would be for earthquake or weather-related risks. However, also storm, wind, and so forth. And then again, it will make a difference whether you are in a developed or not so developed country. Interestingly, take Germany only as a proxy, which I know best. In the eastern part of Germany, this insurance was always sold as a package. So they have a higher layer of flood cover than they have in the West. In the West, you had to buy an extended coverage, and people were, for whatever reason, not buying it. So we have a distinctly higher insurance density. Coming to the question of losses, my gut feeling is I can't give you any numbers yet, way too early, but the macroeconomic loss will be much bigger than the insured loss, which is not good. I'm not saying that we want to have more losses, but this is part of our business, and I think the industries and the individuals are way underinsured.
Next question. Yes, sir.
Gary Booth, Reactions. Okay. A question for Mrs. Wahlström. You mentioned the potential for other forms of risk transfer that governments could explore. Could you elaborate on those comments?
The other forms of
risk transfer.
Risk transfer. Well, you know, you will have noticed if you follow disasters that I think there is a very big risk transfer going on overall in the world right now, because governments traditionally, they have, at least in the richer part of the world, but also in the poorer, pay enormous amount of money or compensation to people after disasters. And in the past 3 to 4 years, I have consistently heard, and in this country as well, that we cannot pay anymore. We have to ask citizens to take more responsibility for their safety. Take this as an overall message. We heard it in Australia, New Zealand, China, Japan, United States, UK, Italy, all the countries that have very big. So they say we can't cope. It's too much. So where does it go? Well, it depends on the country, but in many countries they say, well, local government, you are responsible for reconstruction cost. And where does it ultimately go? It goes to the citizen. Now, we are just very early in this period of one of the biggest risk transfers in history, I think. And this is where I think, and there are examples where the public and private are actually ready to test ideas. And very often what I hear is the private, the insurance will say, well, we need public sector support, at least some seed funding and motivation, because it's a big risk to innovate. And the government tend to say, well, not really, we're not going to push the risk to us. So this is the territory that needs a lot of encouragement. And there are good examples where, in fact, this necessary need for the public interest to ensure that better innovation models come out is taking place, but not quickly enough to provide a good model, I think. And I think we should feature them more.
May I add, Margareta, I think there's, for the last 20 years, there's been a lot of talk about the capital markets coming in to support the insurance industry in specialized areas. And in the last 3 to 4 years, we've seen a considerable impetus, I think partly driven by low interest rates. And we're now seeing insurance, or if you like, reinsurance, elements of the reinsurance business categorized as an asset class for investors. In theory, this intellectually makes a lot of sense and should help peak risk spreading through the world as we go forward and as these risks get larger and more expensive. So I see the capital markets and the cooperation, which is at an interesting point of testing each other right now, as being a very positive, potentially a very positive development.
And maybe one more remark. It's a very interesting question. I don't think in general, in today's world, we have a capacity issue, except I'm cautious on inundation and flood. This is a tricky risk because you have always to deal with anti-selection. But in general, the insurance industry, plus for sure, if you include the capital market, has no capacity issue. It's not a matter of supply, it's the matter of demand and organizing the demand. So now coming more specifically to the question also, collaboration. We have players today in that discussion like the World Bank, the IFC, the regional development banks, where we as insurance industry also liaise to see what we can do together to propel insurance. Of course, this is not for the developed countries, obviously. It's rather for the not-so-developed countries. So you set up insurance schemes. I remember one where we, as a company, were involved in the Caribbean. It was, I think, the acronym was CCRF, Caribbean Catastrophe Risk Fund. And it was supported by the Munich Climate Insurance Initiative. And they are in permanent discussion with all these COPs meetings, COP meetings all the time, to make sure that part of the 100 billion fund is then directed towards these funds to help the very, very poor, for example, in the Caribbean, to at least do a little bit and start to build funds through insurance. And actually take the example of Haiti. The Haiti earthquake happened, I think it was 2 years after the fund was created, or maybe 3. The unfortunate thing was they only had collected until then $7.5 million. Yeah. That, of course, in view of the size of the event, was nothing. Too late the start, too early the horrible event. But had we had 20 years already, and these earthquakes, of course, do not happen every year, not even every 20, you could have collected the funds to then immediately jump in, rebuild the economy, help the people in the country to get back into a normal life. So there's a lot that can be done, and there are many ideas of how one could liaise. Take microinsurance as another example. Governments can do a lot. Take the Indian government as an example that requires every private insurer who wants to do direct primary business in India to have a certain amount of the business in microinsurance. That helps. That makes people creative, because the biggest challenge in microinsurance is the administrative cost. How do you deal with the administrative cost if the entire premium of a full year is $7? Things like that. So I'm full of ideas and examples, if you like, what can be done. It's starting, but it starts way too slow, and we need to push.
Next question. Yes, ma'am.
Polita Clark from the Financial Times. I wonder if each of you could nominate the two most important things that governments could actually do to enhance the sort of cooperation that you're calling for today.
Probably you might get 3 answers. Well, each one has one. Why don't you start? Well, I think the first is literacy. It was mentioned. You have to understand the concept of insurance. It's a solidarity fund, and if you don't have a loss for a risk that has a frequency of 100 years normally, you did not lose money for 99 years if you didn't have a loss, for example. Also to make understood the principle of insurance, that you share risk, and if you don't have a loss, you did not lose money because you bought security for 1 year. If you didn't have a loss, you still had the product. Security, peace of mind. The second one is about pricing. That has to do with the first, education. How does pricing work? And pricing, there's different components to the pricing. Of course, as an insurance industry, you probably would think that we always try to insure everything. Let me tell you, not necessarily. There are some things we don't want to insure. In fact, we rather want the risk dealt with at the front end already and not have anything to insure anymore. So that interplay between preventive measures and what is left is insured. So the price, however, is, in a world that ticks economically, a wonderful way to measure it. And if I ran an enterprise, an SME, for example, and I did know either I cover the full risk with no deductible, no self-retention, and no preventive measure, it's 1,000 per year. And then my insurer tells me, and it comes with a risk manager on site and says, if you build that little wall to prevent the water from entering, your insurance premium is only 500. And if you then take a deductible of 1,000 whatever currency per year in whatever loss, it's only 200 per year. Then you have something on your table where you can make a decision and say, okay, will I build the wall? If I have an inundation every 15 years, I save 500 a year times 15, that pays easily for that damn wall, build it. Things like that, that discussion. So pricing is relevant, and don't have politicians interfere into the mechanism of pricing and that discussion, risk management and pricing. These would be my 2 points, and you both mentioned them, in fact, so you gave me the first shot.
Margareta, do you want to go last, or would you like me to?
I'd like to add last because the capital market is important.
Okay. You'd like to go last, right? I think in answering your question, it's short-term versus long-term. The governments today, particularly in, shall we say, the democracies, tend to view issues in short-term. Climate risk and those issues related to it that we're talking about are long-term. And it's the conflict between the two and the understanding that the solutions can only be longer-term that I think needs addressing politically, firstly. Secondly, you get into the problem of the definition of whose responsibility it is, local or global. We're dealing with an issue that is both. Many of the problems cannot be solved only locally. So unless we have cooperation politically at a global as well as a local level, then you have shortfall on the expectations that could go forward. So those are the 2 key issues for me: short versus long, global versus local.
You know, it's an interesting harmony here, but because these are really the issues that we attack. I think the biggest challenge for us is this short, long-term issue. And without going into why it is like that, but you know, the short-term accountability period for governments, be they local or central, is a challenge in terms of getting credible political action for things that take 5 years or 6 years. So that, and it boils
Or
down
100.
to, or 100, let alone. You know, the leadership issue, we can see a huge distinction between where there is an individual stepping forward to drive something, or where you look to collective action and different types of countries. So in every walk of life, and in fact, amazingly, very often you still, you know, we can criticize business for a lot, but sometimes I think business actually have a longer time frame for the way they think about risk and profit than the public does, which is not a sound separation of labor. Secondly, it's the issue of education. But very often we talk about education as educating somebody else and not ourselves. And you know, I'm observing the disaster environment, and it is literally every major event that goes into the media, you see a public official standing up and saying, this was totally unexpected. I could never have imagined that this happened. This is, of course, you know, a self-defeating perspective. There has to be, if there is one thing, accept as a public responsibility that these things are happening and will happen. And just turn it into an accepted public policy and not an option. When you have a disaster, you pay for it and you show public goodwill. And we are far from that today. It's a very serious and costly issue for so many countries and people around the world. But it's not gone to, you know, I'm reading every year, 2 times a year, the World Economic Forum's report on what do CEOs think is risky in life. And there's an amazing consistency of poor global governance. It's always there. And then depending on what has happened, it's climate risk, disaster risk, and it's fiscal failure, of course. But it's amazingly consistent. If you look over 10 years, the domain within which we move, in the public sector, I don't think it's the same coherence. So this acceptance and understanding of risk, you can even turn it into a positive concept for better social and economic planning of countries. And if the public figures speak risk, then also we as citizens will speak and understand risk. And that's what I mean with education. It's not about others, it's really about ourselves.
While we're doing that, one of the interesting stories that Walter told me was the problem of appointing risk managers for countries. And the antipathy it creates within the bureaucratic system for somebody who might have an overview across all elements of a government's activities and therefore would be rejected. And we've sort of, I can't give you specific examples, but this has been a process which causes resistance to having a holistic approach to risk.
This is an important point. The concept of a chief risk officer for governments. After the crash, the concept of chief risk officers in corporations. Obviously, they've been in the insurance and the reinsurance world for a very long time. But that may be a solution for how you get an individual who has a duration longer than the politicians he serves. And this may be an initiative that would help break the logjam of the largest issue that our experts have identified, which is the short-term focus of politicians by the virtue of their short term in office, and the long-term issues that we as a world need to cover for human beings.
Hi, I'm Greg Dobie, Insurance Day. Can you hear me?
Sorry,
Yeah. Greg Dobie from Insurance Day. Hi. Thanks very much for your comments. Bearing in mind what you've said, I just wanted to ask, this month, I think later this month, the list of systemically financially risky insurers is meant to be published. And I was wondering how good you think the insurance industry is at explaining the many functions it undertakes and the many facets of the industry that it offers, explaining that to governments and policymakers. Because obviously there's been, and the Geneva Association has been involved in a great debate for the past couple of years about the systemic risk of insurers, and it's taken a lot of work to remove that distinction from being tied in with banks. And I just wondered what you think the insurance industry needs to do to explain what you've said today to governments and policymakers in order to get this collaboration that you so want.
A lot more.
Is that a long answer?
I'll pass to Nikolaus, who's the chairman of the Geneva Association, to speak on behalf of the association. From my point of view individually, I've been in the industry for 48 years, and I have, well, certainly for the 40 since I've had any senior responsibility, this comment has been permanent. We communicate extremely badly what our social role is, our function, and how well it's understood in the industry. It's local, it's global, we are misunderstood, we haven't done enough about it. You can't just blame the other side, it's us too. We're lousy at communicating. Okay, some of our business is confrontational because of claims. Nevertheless, we are perceived way below what I think our social responsibility and contribution is. We need to do a lot more.
Yeah, and in fact, this is part of the raison d'etre for the Geneva Association, but I must admit, if you go back 40 years, it was more of a discussion in academia. Interesting for those who were in the industry, certainly industry for those who were researching, but over the last years, the Geneva Association also expanded its audience, if you like, and included politics, regulatory side, and so forth, and also media. The fact that we are here today is testimony to that. So that changed a lot, and I can tell you the same happened with companies. Certainly in, take Germany again, where still today many insurance companies do not really communicate a lot with the public. You mentioned the question or the problem of database when it comes to disasters. Our company holds the largest database, we think, of insurance world for sure. And we started, this is almost coincidence, the same year the Geneva Association was founded, in the mid-70s. We have a huge and rich database. However, the first 25 years, we never made use of it publicly. So when it came to the discussion on climate change, for example, we had a lot to say because we had the data. We had the evidence that one needed. Only 15 years ago, we really stepped up to the plate and then publicly took our share or part in the discussion. Today, we are invited by international entities because they think they have a relatively objective view on climate change, even though it's partly related to their business. There's a lot to be done. And of course, don't get us wrong here, we're not pointing to others here. At least half of the problem is our problem, for sure.
I could add, the Geneva Association has been one of the most prolific publishers of research on systemic risk in insurance, the financial stability of insurance. We have, in the last year, I have spent quite a bit of time with not just the insurance regulators who understand these points, but with members of the Financial Stability Board, those central bankers who will determine what the outcome is or how a list of global systemically important insurers is created. The Geneva Association will continue to do research in this area. In particular, we're going to do work on insurer resolutions. When we don't aspire to a world where there's a zero failure risk of insurers, but one where it is relatively low and digestible, and where any failures are orderly. And this is a term that the Financial Stability Board itself describes as a systemic if it is a disorderly failure. And the hypothesis in insurance is that failures in the insurance area or insurer resolutions are very orderly. They happen over many, many years, and they don't cause the failure of another financial institution or disrupt financial markets or disrupt the general economy. It's a bit different in the banking world, where you clearly have risk that is systemic in the banking world that's endemic in borrowing short and lending long. We'll continue to do work in those areas. Next question. I think we have maybe time for one more. Yes, sir.
Hi, Ben Norris from Commercial Risk Europe. I just wondered if you think sort of multinational companies that have these big supply chains in Thailand and countries like this, are they doing enough themselves to sort of push through risk management standards in these developing countries, or could they do more?
Absolutely. Absolutely. That, of course, is one of the maybe interesting features of our multinational companies, that you, of course, take experience from one country and then export it to other countries. It's not always a one-way street from developed to not so developed. Sometimes you also learn a lot from developing countries that you then transfer back to the developed world. But certainly this, and reinsurance is probably the epitome of it, because we are, by the business model, we have to be everywhere. And we always take the eagle's view, if you like, because we observe the market as a whole and take it also as our duty do exactly what you described. But it's not only us today, there's plenty of multinational companies of all sizes who do just that. And since I have the word, let me make one remark that may sound funny, because you talked about the chief risk officer for countries. Lucky those countries who have a constitutional monarchy. That is the kind of tenure that you need to be a good chief risk officer. Not saying it must be the Queen herself, but someone who really is there for long and is not in danger of being sort of pushed down the next day after. They have that view, and it goes actually even beyond the chief risk officer and opening and making and preparing balance sheets for countries, where you really have to put down the implicit debt that you build up by either ignoring what is obvious, demography in some countries, or not putting down what you pay to prevent or to make sure that you can pay once disasters strike, to make that visible and tangible. And the chief risk officer, the first thing he would do is putting up such a balance sheet. First thing.
I comment on your question. I think from my perception, the international, multinational companies are at the front end of this stuff. Why? Because they're easier to communicate with. 2, because they are taking a longer term view. C, they understand and look at risk permanently. And now there is within most organizations a holistic approach to risk, and the risk management function is effectively enterprise risk management. So that's the area where I think we've made the most progress in understanding these issues. It's where it becomes more disseminated that the whole communication becomes more diffused and more political. That's where the area of progress needs to be made, in my view.
On this, 2 things, just the multinational, of course, for good reasons, are making the quickest progress. And the very sort of painful lesson many of the most significant corporations learned in the Thai and Japanese situation is that they didn't know what their supply chain looked like.
Yeah.
You know, Mitsubishi had 7,000 under suppliers. They had no phone numbers. They had no idea where they were. What did they do afterwards? They reduced the number of suppliers. They made sure they knew where they were so that they could reconnect with them. You've seen the figures for the global economic GDP impact of the Thai floods. It is enormous. So one of the questions we are posing to some of our multinational partners is, you know, what can you do actually to motivate your smaller SMEs that are community-based enterprises to make them more risk sensitive, and how do we sort of together motivate governments to support that? On the chief risk officer, without any views on monarchy or not, but you know, when you look at in the big catastrophic events, and you take time to go and do the forensics of a disaster, so to say, very often it's the complete disarray institutionally that create the biggest catastrophe. Lack of clear mandate, overlaps, too many institutions involved, no chain of command. So if you have a absolutely empowered chief risk officer, that I think can make a huge difference. If you have a chief risk officer without the power, it becomes another accountant.
It's all to do with
yeah.
power.
So the institutional issue is not to be underestimated. I remember just last year, we again talked about Hurricane Katrina, and one of the representatives of the Chief Army Corps of Engineers said that there were 27 federal, national, local institutions involved in managing the dikes. So when you try to attribute responsibility, it's, so unless we are ready to deal with risk management as also a sort of an organizing issue, I think we will continue to tackle the costs of some of these events unless we see them as you can plan for them and you're not ready to pay for them. They're two basic decisions.
May I, Chairman, just do a little advertisement for a second on this subject? In October, November, where the Geneva Association is running in Sendai, a meeting for 2 days on the consequences of the tsunami and the earthquake and its social impacts, which we're expecting to have a good intellectual debate around the issues that you're raising there, Margareta, and a focus. So that's part of the continuing effort to communicate and to spread understanding.
All right. We could talk about this subject, as you can guess, for much longer, but we've hit our time, and we're conscious of your time. We want to thank you all for attending. A special thank you to Margareta for joining us here. Very important to have the United Nations study available to all of you. There are a tremendous number of facts in both of these studies. We encourage you to go into them deeply. If you have any questions where you would like some clarification, please call Anthony and Eric Grant of the Geneva Association. We'll make sure we get an answer to your question. Thank you very much.